Hey everybody, welcome back to Swing Trading. My name is Mike Fairburn. It's great to be back with you where we look in this class at those scenarios in the market where we're looking at a short-term move, maybe up to a 3 to 4 week time frame at most. Really that trend move within the markets that we're trying to spot. And we utilize in this class trends, indicators, price patterns, as well as news. I've got some news to discuss today that might tie in to a potential swing trade setup as well. So I'll look forward to going through that with you folks and really taking a look at some of these prices that are in a kind of a sideways range, but maybe they are set for an expansion move. So looking forward to it. Would like to welcome you all on board today. We've got Josh. Hello to you, Josh. We've got Chicken Little. We've got William, Andrew, Jay Richardson, Life in the Fast Lane. We love some of these names here, you guys. These are great. We've got Richard Judge. Welcome, Richard. Good to have you back, as well as Vic, John Kelly, and Chris B. We do have in the chat, good friend and colleague of mine, Mr. Cameron May. Great to have Cam on board. Does a great job. And I really appreciate him, operating in chat with so many classes for me. I do hit a class of Cam's as well. It's nice to be able to work with Cam. You can follow us both on X, Cameron May, got to spell it just like that, Cameron May CS, Mike Fairburn CS. Love to have you on board. Cam has posted that to the top of the box here. Yeah, the chat box. All right, with that, let's dive on into some disclosures to get going a little bit early here. For information, the information here is for general information purposes only. Now, if we do get into it, options do carry a high level of risk, not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. A short put does risk purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. The paper money software application is for educational purposes only. Investing involves risks, including the loss of principal. There's no guarantee that execution of a stop order will be at or near the stop price. Past performance is no guarantee of future results. And if we get into it, which we oftentimes do, dividends are not guaranteed. They can be cut at any time. Here is a look at some future slides. We throw that out there because we do like to tap into those future charts. Although we don't trade futures in this class, a good friend and colleague of mine, Mr. Ben Watson, I'm sure you've heard of Ben, he teaches those on Tuesday mornings if you're looking for actual trades within futures, but I do like to reference the charts, and so we did go ahead and post those disclosures anyhow. All right, let's go ahead and just tap into our slide that we'll reference from time to time here, because it does talk about a specific price pattern that we do find pretty frequently as we look for those swing trades. And by the way, folks, if you are new, welcome to our class. I recognize everybody's name just about in this class, but there are some new names I do see. Welcome to you. Let us know if you are new in the chat. Just say hello. Great to have you on board. Yeah, and specifically, folks, as I mentioned from kind of the opening, we were talking about the swing trade and what it really does encompass. And that is this move right there. We're just looking for those moves in the market that might look like, based upon different sorts of scenarios with indicators, price patterns, the trend, as well as even news events, maybe more of an expectation that the trader may have that the move is maybe gearing up and getting ready to go. So that is our key. That is our core focus in this class, and we dive into it pretty heavily here. That's just a breakdown of, the bull flag. Notice over here, it does talk about the trends. It talks about the time frame that we look at. These time frames really do fit into that 3 days up to darn near a month's time frame, depending upon how we want to trade these, but oftentimes shorter term in nature, because sometimes these moves can happen just over 3 days. We had one, I want to say about 3 weeks ago, that hit our upper target in about, it was 1 day. The next day it shot up. So they can be less than 3 days too. I don't want to say, hey, it's got to be 3 days. Prices can drop down. They can hit a potential exit level quicker. But this is the time frame. These are the trades that we focus in on this class each and every week. So with that, what I wanted to do today too is start off with everybody here, looking at our general big picture markets. And what I wanted to do was give just a brief breakdown. I think it is kind of interesting what we are seeing within the markets, because we do have maybe a more dovish tone from the Fed. If you took a look at the Fed's comments as of last week, in fact, I'll just go ahead and quickly post this up. I did put kind of an extensive list of discussions, or comments, I should say, is what they were, comments that Fed Chair Powell had mentioned. and basically kind of highlighting more than anything the expectation. I'll see if I just push this up full screen for you. What we could expect going forward. You can get a whole host of these in here. I've got some earnings updates as well if you're interested in that. But it was really started over here last week. I'm just going to do a really super brief review. Did have a post in here as a post I was actually looking for, how tariffs will affect key products. By the way, how will interest rate changes affect key products? That's kind of a big deal too. What's going to go on there? I'm going to have a short video on X later this week specifically about that. But these are some of the comments from Jerome Powell as they were meeting at the Jackson Hole Symposium. Really, the balance of risks appear to be shifting, and the effects of tariffs on consumer prices are now clearly visible, and tariffs will be short-lived. The impact of inflation. I didn't read the whole sentence. I want you to read that if you're interested in that. But it did shift to a dovish tone. We had a move in the markets. We are going to be looking at one of the Mag 7 stocks today for a potential setup in a scenario here. And lastly, the rate cut probabilities did bounce. I don't know where they're at because they do shift pretty frequently, but there you go. That's what we had from the CME watch list for September rate cut probabilities, folks. We hit over greater than that 90% level. So there was a big expectation there. And by the way, I did see them shoot up today, and they went towards the October timeframe too. So it looks like there might be some expectations for a second rate cut in October as well. So wanted to review that with you. If the Mag 7 did start to really spike, that could be of interest. Let me just show one other chart here. I normally go into more detail on these within the markets and sectors class, which I will do tomorrow. That'd be Wednesday, towards the close of the day. We'll hit that markets and sectors class. But here is something to consider as we go into a sideways range in the S&P 500. Now, if you jump up top here, just wanted to highlight this because we've done this before. How are we holding up relative to our seasonality, our normal seasonal type move? And let's make this comparable based on a percentage basis. But how are we holding up in August? Well, it looks kind of similar to what we get. Notice this is your long-term run on the this is the S&P average over 5 years. The 10, 20-year, folks, they look very, very similar, but that is a 5-year average, as you can see up top. 5, I'll just put year in there. Year, so you can see it. But notice we did kind of pop back. I mean, notice we had a little bit of a rally here, and we had a rally this year. We kind of dipped a little. We dipped a little. Like I said, the seasonal averages happen. They can happen pretty frequently sometimes on any given year, because what you're seeing is the average of how the price moves on the S&P 500 given the monthly time frames down below. And it's not the same every year, but that's why I kind of highlighted heavily during this time of the year, because we do tend to get stronger July, kind of a upward but consolidating August, and then maybe a little bit of a dip in September. I always want people to be aware of that because it is the average. It doesn't have to go down. It could go, it could shoot up. It could go down further. It could go sideways. But just on average, that's what tends to happen. So keep an eye on that. We are kind of getting close, aren't we, to this time frame where we do kind of flatten out and we dip a little bit here. And that is one core reason why in this class, when we do look at swing trades, folks, we try to incorporate a lot of different elements that traders might be looking at: price patterns, indicators, volume. We talked a lot about volume. We've talked about, news today is going to be sort of interesting as well. So just park that in the back of your minds. I just want you to be aware of it. So, if it does unfold that way and you start to see, kind of a lower low, lower high, and let's just look at that right now, because maybe that would fit into the scenario. That might be the next piece that could fit in. But just quickly over here, let's say, what if we start to take out that low? Could that be maybe the original, an initial sign? And by the way, maybe that happens over here somewhere, because this is actually the September timeframe. Just something to keep in mind. And it's always interesting to have these different scenarios in your mind so that if, in fact, it does unfold, you're not too surprised. Anybody not thought of a scenario before, and then it does unfold, and then we might, I'll speak about myself. There's a tendency to maybe react emotionally to it, like, oh, I gotta buy, or I gotta sell, or whatever it is, or or it's breaking down. Maybe it's more of a deer in the headlights, and then what happens is prices just continue to dip where we had clear indications of getting out. So I don't know if you've ever been in that situation before, but that's kind of like a normal sort of investor psychology. We all have to get through it. Let's just put it this way: I had to. And I think I've heard that a number of people kind of scenarios like that. So keep that in mind. Now, in addition, as we are looking at this, keep this last point here is SPX-EW. That's the equal weight. Equal weights are outperforming the S&P 500. Now, the difference is we have the mags in the S&P 500 that have done so well. The Magnificent Seven to be exact. Okay, we've had the mags in there, right? And we can find those mags. But what's interesting is if we were to do something like a little comparison, let's say for example a price ratio. What if we did a price ratio here? And well, you know what? We can take a look at this a little bit later. But I don't want to spend too much time. I'm going to hit this heavy on Wednesday tomorrow if you want a full review of the markets. But just keep an eye on this, and there is a trend line we can watch. And basically, one of the key indications is if you start to see those mags, and you can see them, they are heavily weighted in the market. I mean, we're looking at a market weighted index. I'll go like this. It's kind of not exactly a circle over here, but you get my point. I had to slip in Amazon in there, and we don't have Visa in there, but some of the big drivers, Broadcom's not in there, but a lot of people have said, hey, why isn't Broadcom in there? By the way, Tesla is in there, right? All right. Well, that's what we're talking about. By the way, quick note, just super quick last thing. You can come over here and just add them all together. There's an ETF for it, but we don't talk about ETFs in this class. There's another class that talks about ETFs. But there you go. Just add them together. And there's our Tesla. There is your 7. There better be 7 there. Yeah, okay. Otherwise, I've been looking at the Magnificent 6 for a while. But there you go. And that's kind of a look. Notice it's not hitting a new high. But watch this close. Maybe this breaks down beforehand. I'm watching it. There's a little bit of a support level there. I mean, why not watch it, right? It is. I've talked about watching it, and it could be an early indication because that's where we're really kind of seeing some of the weakness in the market relative to the others. Okay, wow. Let's jump into our topic. I didn't want to hit that though because it is interesting, and I just want to make sure you guys see that. Okay, more though in that Wednesday class if you are able to make it. Now, let's take a look and let's review some of our existing positions that we do have out here. Now, we do have this stock on, we did have this trade sitting out here on Merck. Now, this was simply a trade on, it was a measured move. We were looking at this price range right here. We had the breakout and we had the rotation in place. We weren't sure what the Fed would say, but we did see some of these healthcare sector stocks in the S&P 500 really breaking higher, breaking a long-term trend line. I'll draw that purple line in right there, flattening out and then taking out highs. Now, what we've since done is pulled back a little bit, but again, what are we getting close to here? September, which is kind of a pullback. This is kind of a defensive group. And maybe we hold, you can't see it now because I've got so much. There we go. Maybe we hold near this support and maybe bounce over that time frame. Maybe a thought. It could happen. It could happen. If we start to see some selling in the broader markets, maybe some of the defensive stocks are stronger in September. But that's one of our trades that we have in right now. It's kind of steady as she goes. And what do we see? We got this trade. This was a breakout, and a lot of times those breakouts don't continue. As a matter of fact, they will come back down and they will do just this. They just don't continue sharply, significantly higher for an extended period of time. A lot of times they will come back here and they will just rest upon prior highs, and we call that support. We call it a breakout and a retest, basically, and that can also be a strong sign out there. And that's one reason why we did put a potential exit in the form of a stop down here, down at this level. I remember, again, the stops don't guarantee an exit at that exact price. They do compete with other existing market orders once they are triggered. By the way, here I am. I've got to flip this back. I don't like looking at this on a percentage basis. So once I flip that, notice over here our y-axis is all in percentages. So let me flip that back to Something we'll recognize. There we go, because that's where our targets are. And that was our measured move to the upside. So Merck, steady as she goes right now. Don't really see a lot here. We shall see. We shall see what does happen in September as we kind of sort of think ahead of what might happen in the following month, the next month. All right. Kelly says FOMO. Yeah, I mean, there are a lot of scenarios out there, Kelly, especially, I think you bring up a great point. If you're not thinking ahead of different scenarios and setups, boy, it's just like, oh, it's time to get out, or I was panic time, fear and greed, those emotions come in. I'm just giving you guys a little bit of history of what I've been through, learning. It's a learning process for sure, but good to talk about it, get it out there. Here's the other one we took. Now, this is still kind of going sideways a little bit. This was a play on electricity, which is a big demand driver for the AI group. Uh, there's a huge demand for it. We talked about the Google searches require 10 times the energy as, the AI search requires 10 times the electricity literally to do the searching that a standard Google search does, like you'd find previously. So there's a big demand. I mean, AI, and that's just, some of these AIs now that are coming out for version 4, version 5 of whatever AI you're looking at, they're really, really in depth. And the thing I'll say here is that could be like a macro sort of driver behind the scenes with this swing trade that we were talking about. Has not hit our stop yet, but we do find ourselves in this situation still kind of similar to Merck, where we might have a longer term support level. And notice we did put that stop below that level right there to give us that flexibility. Some traders might even, if it hits that level, maybe they take half off the table because they think it's going to be strong or whatever the case is. This is one of the companies that did pay a dividend. You'd have to check the yield. Well, shoot, I'll just check it real quick. It was about a little over 3% right now on this guy here. All right, now let's get into some of our other trades and what's kind of been moving in the markets. That's right, Josh. You can't do it without energy. My goodness, and that's just a huge, huge demand out there too. It's interesting too. We've got another one. We'll do a poll on for another electrical stock, but it's a little bit different. But it's still there's a demand for electricity for sure that would potentially impact it as well. One of our last ones that we put on a little bit ago, a trade in our final review here, was a gold miner, and you can see what gold's been doing. Gold has really been interesting because gold stands outside any sort of political, monetary sort of a monetary pricing or policies with different countries. It stands alone. It's not really impacted by it. In fact, it's impacted when there's a little bit of uncertainty there. This was a fairly sharp move to the upside, obviously. And what have we done? We've done nothing but contain that price. This is not a correction. This is a consolidation with a little bit of an upward swing associated with it. Now, I want you guys to think about this too. If the price of gold is holding its levels, what does that do for the companies that are out there that are, in fact, getting paid for the money? When they dig this gold out of the ground, what prices are they getting? Is gold holding at a price that might make sense to these companies? I mean, in terms of generating higher revenue, right? Because that's how they get paid. Gold's going flat here. That's what I'm getting to that point. In other words, we're retaining these levels in here, right? These are really, really high levels for gold. I mean, relatively speaking, and that can help to juice up some of those revenues because that's how they get their profits. If they get it out of the ground, they can sell it on the market for higher levels. We are looking at the commodity itself right here. And that's why some of the companies that we looked at previously, we had got in because there was a little bit of a fundamental play to it as well. Look what's happening. This is actually going higher. We have a trade on this stock, and we put it in about a month ago, but we kind of just sat with it. We put it in right here as it broke our trend line for a little bit of a flag. Now, it didn't reach our long-term flag until today. And so it's about slightly over a month later, but we just kind of rode with the trend. We reached that conclusion as a class about 2 weeks ago that we were just going to kind of sit on this one and just kind of let it ride a little bit. Now we got a decision to make today though, and I want to get your comments on it. I want to throw a poll out, but I've got three answer potentially three potential answers in there. So I would hopefully like to get at least 30 votes in there. We'll get at least a very minimum sample size to get us a sense of this. But folks, taking a look at it, flag up, consolidate, flag up, consolidate. And here we are again. It's another flag. What was just happening with the price of gold? Gold is holding at higher levels, and the chart looks pretty interesting. It's holding it. So could that impact these? Well, yeah, I mean, it can. And here's another one that's really was kind of a laggard initially, but look at this. Remember old Barrick Gold? How's that been doing lately? Well, that was a nice little flag pattern there. We unfortunately missed it, but we did get the one that was in the US. Now, there's also an ETF too. We didn't go into detail on that, but we mentioned it. Now, here is the flag pattern target for the T2. This right here is our T1 target. Right there, the high, when we reach that high, folks, right there, we hit T1. Okay, now T2 is the length of this price added to this price down here. And it's actually very, very close to where we are up top here. That would be a T2 target. We missed it just barely down here, but we stuck with some of it. And here we are again, and we're just breaching that level now. In fact, to get a more exact measure of that, well, I'm going to pop down here at the bottom. You can see me, you guys. Easiest way in the world to reach this nice little drawing tool. Very, very helpful if we're looking for a more exact metric, as opposed to getting the actual dollars in there. But I'm just going to go to the Fibonacci retracements, and to the right, extensions right there. Now let's start off the pole of this flag off the bottom, and we'll pull it to the top. There it is right there. We'll pull this down to the other portion. Look at that. Are we just hitting it? Just barely. I do like to use oftentimes the yeah, right there. So we're just about there. I got our last little low before we really took off, and we just hit it. So we did just today reach our T2 target, our target number 2 at that level. So in other words, it did take a little bit longer, but you'll notice it wasn't hard to necessarily hold on to this because gold was staying strong. And earnings, how did earnings do? Well, it looks like the market appreciated the earnings. And you can see over here, what happened from that point on? We've kind of flagged higher. We held it again, kind of staircasing on the prior highs, like in many cases right there. And right there, these swing trades will do. And we've got a good, strong follow through today. So here it comes. We've got to do this. I'm going to throw the poll in right now. Let's start one, and you guys tell me what to do here. Okay, so got 3 potential answers, though, hoping to get at least 30 votes so we can get a good sense of it. You kind of need a little bit more when you've got like the 30 votes in there. For the AEM position, we got the following. Okay, I'm going to add one other option in here. And for our paper money position, and there goes the poll, folks. So we're waiting for that. Should pop up here just momentarily. It's a hold it. It's a sell a half because we just want to let it ride, or do we take the whole thing off? What do you guys think? It really can depend too on your expectations. I would say for this class, for what we do in this class, in many, many cases, at the very least, we'd sell half. And generally we would end up, hitting a T2 target, we'd sell it all. But I wanted to throw it out to you guys and give you the say. And by the way, while I'm waiting for that poll, one thing we've talked about too, for a potential exit, because so much price action can happen above a simple moving average. This is a little bit longer term moving average because sometimes these companies that are commodity based, I mean, they can take a little bit more time to develop. But there is your 20 period. You notice anything about the 20? You kind of came down close to bouncing off it, bouncing off it. Sometimes traders will just come over here and say, you know what? I'm going to stick with this guy until we actually close below that 20. Now, sometimes it'll close below the 20 and bounce right back up. That was kind of a longer term swing trade, right? I mean, the flag was a little bit longer term, but that's something to consider as well. All right, let's go ahead and finish up that poll now that we've got it. Let me pull this over real quick. If you didn't vote, throw it in here in the next 3 seconds. Okay, let's pull it up right now and see what the winner is. The winner is, I should say, the votes go to sell half. It was close though. Hold it, sell half, sell it now. There you guys go. Whatever we put in, and thank you so much for the votes because, yeah, you always want to try to get, I think the minimum for a sample size is 30. I'm trying to go back to my stats class, but I think that's what it is to kind of get a better sense of the population if you're taking a sample. Anyhow, 55 is beautiful. We've got it. Gives us a good sense of the class. We're very, very close. Let's go ahead and do this. We'll do exactly that. We'll sell half, and then we'll let the rest ride with the 20-day moving average on this. Okay, so that's simple moving average, nothing fancy. And if it gets out of that 20, we'll just let it go because perhaps maybe we're looking at a longer term move that we might see over here too, like a weekly type flag, right? It could be quite large, but this has been a good run thus far. There's no doubt about, I mean, you know, it did hit that target. So we'll see. But again, we're just dealing with paper trades. We're getting this all set up and in place, but I'm gonna go ahead and go right over here into the trade itself. So simple, just active trader. Let's go ahead and sell half of that guy right now at the market. We've been in it for a little bit, haven't we? Sell it, market, auto send. I'm just going to go market order, folks. Just super quick here. We'll sell half that guy and voila, there we are. Now, let's do this. I want to make sure I get this right, but what I'll do, and we can talk about this further, I am going to set that stop at that 20 period moving average on a break. I've got so much to get to though. We've got to kind of skip back because I want to get into the other stuff that we were going to talk about. But that is something I will do. We will look at it next class. Okay. So stick with us. We'll keep tabs on this. But hey, if you had a successful paper trade, good job. We did it with you know, a lot of it was that gold. It was kind of the macro driver sort of behind the scenes on that particular one. All right. That was our paper trade. Now, here is CCL. Now, we talked about CCL last week, if you recall. And CCL was one of those companies that was on that X video that I did in terms of the potential flag pattern and breakout. And take a look at it. It seems to be breaking out. Now, I ended up taking the trade, which I'll do fairly frequently in that markets and sectors class. So if you want to catch that, you can also find out more details about that. But here you go. What I wanted to do in this one is just add to this position. It's up just a little bit from where we got in at, you can see, but it's breaking out even higher. That was we had a target. You can see it here. In fact, I've drawn it in. This was actually the flag pattern, right? And the move really came after Powell's comments, because if you cut interest rates, sometimes it's the discretionaries. People might have more money, but anyways, those can kind of tend to run higher. And that was the move. So from this price move here, we're just taking this price range and we're adding it to this bottom, the consolidation. And that right there, folks, is the 100%. And that's exactly why we have that potential exit level right up to that level. Now, what I wanted to do just for fun is go ahead and add 50 shares in here. And I want to pose a question for each of you in the chat. Have you guys ever added to a position that's been going in your favor? Does that ring a bell? And why would we do something like that? Why would we add 50, or why would we add to a position? In this case, we'll just add 50 shares right over here. I'm just going to add it right now. And I've got to adjust some stops. I could do that afterwards, but I'm going to put it in here because it's breaking out. Why would we add to a position that's going in our favor? Well, the one thing I can say is it doing what we thought it was going to do? If it's doing what we thought it was going to do, and we think there's some real strength behind it, This is just an example trade, and we're just saying that some individual investors, traders, might say, why not add to a position that's working in my favor? But maybe don't add too much, but maybe enough to try to capture really the meat of the move after you have additional confirmation. They may consider it additional confirmation. Like, for example, breaking above the high and holding. It's not to say that we can't break back down, because we can, but sometimes traders will do that. Does that resonate with any of you guys? I'm just curious in the chat if you've been there before. Kevin says yes. Buy stop with a break higher. Okay. Yeah, you're getting a little bit more details, right? More information, more insight. And you say, well, yeah, why wouldn't, could I do that? Would I want to adjust my potential exit levels or management? Sure, because you could be risking more, but maybe it's an expectation thing. Like, okay, it's even doing this. It's doing what I thought, and it could reach it. So it's sort of counterintuitive to a lot of traders. It was to me, and that is buying more as it's gone higher. I was one of these guys. I'll just say it. I mean, I've tried to just be more realistic with what might be more effective, or what the way some traders, investors would do it, because you're getting more confirmation. But it's like, I was always this guy. I want to buy it right there. I want to buy when it's low, and that's where I want to load up. But the problem there is I don't actually know, as much as I thought I know the future. I don't know the future. And nobody knows the future, right? And we just don't know. And so we have to kind of adjust based upon new information that's coming in, because we don't know where the actual low is going to be. We don't know. We think we know, and it's great if you could do it. But I always said to myself, no, I knew this was the low. And so, but I didn't. The reality is I didn't, because I don't know the future. So I want to throw that out there, and that's why I wanted to show you how we can add to a position too, maybe as prices are doing what we thought it could do, in line with, and in this case, we would just be looking to take out, instead of 100 at this 100% level, 100 shares, it'd be more like, 150, and maybe, because it's working in our favor, we could take some paper profits on that, right? Because that's what it is. We're just dealing with examples here, but that's the idea. And by the way, yeah, it's holding up pretty good. We have some good money flow at the bottom as well. All right. Well, let's get into some new trades too. Well, that is a new trade. It's an existing trade. You guys might not have seen it if you didn't go to that Wednesday class, but in that Wednesday class, I will look at sectors that are outperforming. This was one that was tied to interest rates, and so we hit it. Now, the next one, folks, Apple. It's a Mag 7. It's been holding up too. Remember this break? Well, you probably don't. I think I might have mentioned it. I know I did in an X post, and it broke above here, just nicely above the moving averages. It extended higher, a nice little breakout. Now, sometimes what we can do is we can tap into news, and I just want to highlight this over here, because we did say, hey, September can sometimes be a weak time frame, but because we are looking right towards the end of September, but interestingly, we've got a trend that's up. We've got a trend. We've got a price pattern here too. Price pattern, maybe with that trend, we've got a flag. We had a nice little volume spike over here too. Money flow went with the trend. You got a little bit of a higher high. RSI showing some strength. Oh, volume dipping on the consolidation. We've seen that with our flags. We've seen this consolidation maybe on the verge of an expansion. We don't know. But the one thing I'm going to state over here is Apple just announced today, and this may have a positive impact or not, you never know, but on September the 9th, and this could be a catalyst for a flag or a swing trade, but on September 9th, they host the launch event, is what they call it. We have new products and things that come out, and in times past, sometimes you'll get a move off of that as well. So that could be lining up for the possibility of a what? Of a flag follow through with that. By the way, notice I kind of drew this over here intentionally around the 9th, because what happens? Not all the time, but what can happen. It's always a what can happen, because we're always talking about the future. Sometimes prices will move ahead of the news, and then they sell off when the news comes. That could equate to a move up top where on that date, it gets announced. Buy on the rumor, sell on the news, or something like that. This is not exactly a rumor. That was just like the old line that some of the old timers used to use. But there you go. So let's put one on Apple, okay? And the thing is on Apple too, we can give it a little bit of room below here. I'm going to put it just below our 20-period moving average, you guys, at 221-ish. That keeps it fairly tight. So our risk reward would be something like this, like that. That might be our, oh, I'm sorry, a little higher. So if our getting in, we can't say specifically, but because we don't know if like our stop would trigger at that point. But I want to put a stop at 221. And so it can at least compete for an exit order at that point in time. But maybe our target would be somewhere like, just using this as an example, right towards the prior high. I'll just put 255-ish. It might be a little bit more. I'm just eyeballing it now, but I'm going to adjust it later so we can see it. But for the sake of time, let's put it in right now. So let's go into our trade tab. I'm going to buy custom with an OCO bracket. One cancels the other. OCO. One cancels the other. Let's make sure these are good till canceled. I like to throw this guy in as a market order just to get one under our belt. We'll just do 100 shares on this. Upside was 255, right? Yeah, 255-ish in that range. Can always adjust it. I know our potential exit level in terms of the stop was 221. We got a GTC on both. Let's throw that guy in. That is our confirmation box. Always go through this step just to make sure that you've got everything the way that you expected it. There's a buying power effect right there as well. We'll send that guy through. There you go. Okay. Next up, let's talk about this company. This is XYZ. This is called Block Inc. Now, Block Inc. has kind of been in a longer-term consolidation, but as of late, we had seen a little bit of a rally. They did beat earnings, their past earnings, like most companies here. Expectation was 25 cents. They came in at around 62 cents. Prices have continued to consolidate here, and if you look closely at that, what might we have here? Okay, this is, again, maybe the 3 to 14-day time frame in terms of an upward breakout, but this could be something like the swing trade up, the flag pattern up, the consolidation. You notice, let's see, can I get that looking a little better? There we go, a little more room. We just broke above this high. So the consolidation, I wouldn't count this because we didn't close above there. This is not counted. It was a big earnings day. We ended up holding ground, but here's that kind of that consolidation. We kind of came up. The market rejected those levels, but we still continued to make lower lows and lower highs. Okay, so notice though that we did break out this high, and with that Fed announcement news on Thursday, Friday-ish, we had that follow through. We broke back up above our 20-period moving average, which had been a pretty good guide, at least in terms of the structure of the existing trend. Now, we took out these highs right there. That is referred to as a close above the high to low day, a Cahold, and we had that Cahold right there. In fact, we had a Cahold that didn't just close above the high to low day. It closed above this high, this high, this. We closed above a lot of highs, except, well, not that high, but this whole range we closed, and we're kind of going sideways here. Now, if you look down below with me as well, here is the money flow. The money flow, or like unbalanced volume, is very, very interesting because it took out some prior highs here. Now, when you take out a range, the money flow, according to this indicator, for those people that do use it, it says if you take out this high, which we clearly did, and we took it out down here. In other words, it's looking at the accumulation of volume right down through here. And you got a major spike. We're holding that range pretty well, but volume is substantially higher. And if you take out this high, which correlates to this price high, according to those that use this indicator, it says you will take out that range. Now, that's a big round number. Folks, that is, some call it the century mark, right? That's 100. Sometimes you'll find resistance at 100, which we did. But getting up to 100 from where we are could be, or even before 100, could be an interesting scenario. Now, one thing I talked about in my class on ThinkScript, because I do go through indicators in this class and we do look at different indicators, is this right here. And that's that big volume spike. And sometimes you got to be careful because if you have a big volume spike here, it could mean, it really influences this. And so we talked about the volume flow indicator on our ThinkScript class on Friday. Folks, I'll just add it in real quick. And this is just a good reference because it says, hey, let's make sure, oh, sorry, you got to actually spell it out. VFI for short, volume flow indicator for not short. That's the long term, that's the name of it. But what it does is it looks and says, hey, it knocks out that volume. And it says, no, we're not going to let that volume pass. That's too high. We got to throw it out. If it's 2.5 times your highest volume, it's just too high. So you can come in here and do a second check on that short-term move when you got the spike, and just to ensure that, yes, you're getting another high over here. Did you break the range? Are you extending higher? We did. We got it. Now, if you are interested in this, because we did create a scan on how to go through that. We went into more money flow details as well as we went through it. But this was that ThinkScript class that we talked about last Thursday now. Used to be Friday, it's now Thursday. Just spotting volume accumulation with the volume flow. And you're just looking for more buyers than sellers. You can try to track that with that scan. It'll seek it out for that indicator. This is the playlist for this class. If in fact, folks, you do find it interesting, that's the playlist for ThinkScript. And here is, so playlist first, and here is the ThinkScript. If you want to take a look at it, I'll just copy this, the link address. Hopefully that comes through. ThinkScript for volume right there. But I think it could be helpful for you guys. I was thinking about you guys in this class actually when I came up with that, that scan, because it's a newer version of the on balance volume, which is very similar to money flow. On balance volume, folks, been around since 63. That's 1963. And this was the newer update to it that lets you kind of see how is the accumulation distribution working now, shorter term. Kind of like on that swing trade time frame. You might find that helpful for this class. Folks, if you're finding value from our presentations here in this class, really appreciate it if you would hit that like button and subscribe as well. It just lets me know that you guys are finding this kind of content useful, and we'll keep it running. We'll keep it going. But it is based upon, feedback as well. So thank you for that. If you do find it interesting, hey, by the way, we got to put a trade onto this because we want to put one on, just a paper trade. And so let's just do that. And just for the sake of getting this going, let's just kind of get a general sense. I think actually our target was closer to 90, but maybe this one kind of moves up a little bit. But let's do this. I'm going to go over here and we'll do a buy custom OCO bracket order. We'll do market here. I'll set these out a little bit and we'll just adjust them a little bit, adjust them in a little bit because we are running a little bit low on time, but I wanted to get this in. I'll just adjust them on the chart. Okay, but let's set this for 90 for now. Confirm, always take a look at your order entry, send that through, you guys, and here we go. That's the chart. I'm going to pull this guy down, our potential exit with the stop, down to the lower end of the range, and that's good for the upper end of the range. This was that company I wanted to bring up, AEP, another electric type company. We talked about the uses for AI, support level, longer term breakout. Yeah, some of these have shown some real strength. Here's another one too, and I might put a trade on here for us in this class because we're a little bit out of time here. I had a lot to talk about today. Oh, wrong one. IVZ, Invesco. Think about this company flagging after breaking a high as well. I wanted to leave you with that. We talked about indicators today. We talked about trends. We talked about potential expansion coming out of ranges using indicators, price patterns, as well as news on that Apple trade, folks. So thanks so much for the comments in the chat. Thank you, Cam, for your help today, as always in the chat. Folks, I hope you have a fantastic rest of the day. I'll look forward to taking a look, and we'll keep tabs on these each and every week. Folks, have a great rest of the day. See you next time.